Good morning, traders. Welcome to the Flow Show. Another day, another dollar, as they like to say, and that's what we're hoping to do today in trading. Morning, K-Man. How you doing, sir?
Morning, Ryan. Morning, everybody. Another day, another euro.
Yeah, another plunge. I've been told off for calling today's move a plunge by Mr. Michael Brown, taking that up on Twitter. But you have to see it in the context of what is a plunge in the euro. A 58-point move is a bit of a plunge in 15 minutes, but nevertheless, we should argue about that one. Right, let's get stuck into it. Quite a bit going on this morning. Let's hope it doesn't die a death until the Yanks come in. There's not been too much out of China recently, but UBS have decided to cut their 2024 growth forecast for China to 4.6% from 4.9%. They've also cut 2025 forecast to 4% from 4.6%. That's probably a bit more like what we might see from China. They expect growth this year of around 5%. We know how they can potentially massage those numbers to get there, but based on the way China's been going recently, one might think it might be a bit of a stretch to get up to those numbers. The Nikkei had a bit of a piece out overnight saying that China are now the global leader in 90% of critical tech research. Not really something that's that market moving, but keep that in the back of your mind for the geopolitics and obviously for things like commodities, particularly gold and silver and other precious metals that go into a lot of tech as well. So one of the reasons why they may be hoovering up a bit of gold, or were hoovering up a bit of gold. Coming over to Japan, the government has upgraded its view on the economy for the first time since May 2023. They say the economy is recovering moderately, though appears to still be pausing in parts. They've upgraded also their view on consumption from the first time since May 2023 as well. And housing construction has got an upgrade too, the first time since June 2022. This is a monthly report they put out, just giving a line on each sort of sector as how they think it's going. What we have got over there at the moment, they've had a big typhoon hitting in the southern part of Japan. I don't think there's been any effect made damage thus far, but if it turns into something, you could see a bit of repatriation back into Japan, so you might see the yen gaining somewhat. So, okay, were you going to add to that?
Right. No, it's actually a bad one.
It is a bad one, is it?
Not slowly, so Tokyo may have a bit of a part of it as well.
Yeah, well, I hope your family are right over there.
Well, we've seen, of course, people compare, how shall I say, catastrophes, natural catastrophes to the big one in 2011. It may have a little bit of impact, but on that front in particular, there's still apparently some money left overs in the coffers of the repatriation 12, 13 years ago, which haven't been used, which have been put in some kind of reserves to prepare for the next one, because after the 2011 there was constantly a risk of having the next big one coming. So I'm not sure whether we are going to see a lot of repatriation, but I've been keeping up to date, of course, because of for personal family reasons, and it is a nasty one. So we need to pay a bit of attention to what happens in the next 24, 48 hours, I think, because it should hit Tokyo sooner or later.
Yeah, well, as I just said, first and foremost, hope your family stay safe throughout that. And then from a market's perspective, it can be something like this, can be something that moves the yen around. So just keep your eye on those headlines, as we said. Right, over in down underland, Australia, there's a bit of data out, CapEx data, investment data, all showing rather negative numbers there. Private new CapEx coming in for Q2 down 2.2%, was expected to rise 0.9% from a prior positive 1.9% as well. Plant and machinery down, building investment down as well. Numbers that yet again perhaps point to a softening of the economy and maybe the RBA's hawkish stance proving to be futile again. So again, more data just saying that a hike scenario or hike thoughts are not likely to come to fruition. We've got some CPI data kicking off today in the Eurozone. Spain came out first, saw quite a significant drop in their CPI, more than expected, 2.2%. From 2.8% was expected 2.4%. The Eurozone measure HICP also showing a significant dip as well. Market didn't really do an awful lot of that, just came off a few pips, but then we got these German numbers, the regional numbers coming through, and again quite significant drops on the year-on-year numbers. 6 pips there, 4 pips there, 9 pips there. So you can see the type of drops we're getting. Now this is really what sunk the euro this morning, and it's twofold, because Germany, and it was only last week, the Bundesbank came out saying that they expect inflation to rise into the latter part of the year on energy base effects. That's obviously not happening this month. Obviously, this is also coming ahead of the pan-Eurozone numbers tomorrow, and we also get some others, France and Italy, flash readings for inflation. So this is all adding into the September ECB expectations for rates. And as you can expect, the odds for cutting rates are rising on the back of that data. That was quite a significant move, as I said, in euro dollar. I don't think I've ever seen the regionals move the euro as much as this, Kay.
Well, I mean, it's a big drop, Ryan. It's well, and coming on the back of that Bundesbank report, as well, as you said, like the market, of course, translates end of year as today, and there was a bit of a surprise, especially as well, that we've seen the euro already being like a little bit capped. Look at the euro crosses we've been talking about, the euro sterling, euro commodities, they're all pretty heavy. And it comes on the back of all this, where the market thinks that we should see an acceleration into month end, perhaps. And I think a lot of them have been surprised and need to adjust their positions on the back of it. It's a pretty steep drop, and it just, how shall I say, it just also reinforces even though CPI is something that doesn't necessarily reflect strength, because we saw for many years that the Japan was in deflation, negative CPI, and yet the yen was very strong and everything. But it just adds on to the German picture, and I think that's simply what the market is looking at now. It is gently crawling back the euro, but I do find those drops pretty sharp. We also had that Spanish CPI. We just had a few minutes ago, which is one of the smaller countries, of course, the Belgian CPI also coming lower. And then imagine tomorrow what the French CPI may do if it also comes off. That's going to really, I think, reinforce the fact that ECB may cut their rates, and then we are looking at the other side of the euro pairs. Obviously, yeah, the US is also to cut, but all the rest is a bit of a question mark right now, and it weighs on the euro, and I think it's rightfully so. I would say.
Yeah, no, I agree with that. I think there's two things here, and you've got to take it for what it is. Okay, the regional numbers can be a bit all over the place. Some are in the 2%, but I think from a psychological aspect, seeing some of these numbers get a one handle on them, which is obviously below the ECB's target, has probably been the bigger shock here. You can see going back where some of these numbers have been trending. So to see some of these going below the ECB's target, which is not 2%, it's close to but below 2%.
Yeah.
That's the official line for the ECB. Again, was a bit of a shock. Some had already been there previously, as you can see there. But also it's another reminder. Now everyone's been Fed for the last few weeks. It's also been a reminder that there are other big central banks who are in the mix for cutting rates as well. So that's perhaps adding a bit more to the we've done our pricing for the Fed and now we look at the others type thing. So there's it's end of month as well, always a sticky time for all this data, but maybe we have to look at see what the Eurozone numbers do. If we don't get much move on those tomorrow, then the market's probably done a bit of its ECB pricing on these German numbers, I would think, Kay.
Yeah, but I think while you're on that page there, the ones that we really have to pay close attention to as well is this North Rhine-Westphalia dropping below 2% now markedly, and Bavaria being like really on the verge of dropping under the 2% mark as well. And but as you say, it's the direction and the trend all those numbers are taking. They are for a lower trend. Oh, and we know there's going to be like bumps and we know that like energy prices can do a bit of can stop the downtrend a little bit. But then, I mean, the trend is obvious, right?
Yeah, and we shouldn't forget the pressure that the German central bank or bankers can put on the ECB. Being the largest economy, they're seeing they're the weaklings at the moment, and they could see disinflation or starting to get maybe even into a deflationary territory, and they won't like that one little bit, and
that
usually
would be something.
big hawks. Yeah, usually big hawks. They'll be pushing for cuts, and they'll be one of the loudest voices to get that. And as we learned from the Fed, it doesn't take much for the market to get all irrational and start doing stupid things like pricing 50 pip cuts from the ECB. So, as I said, we saw it with the Fed. You wouldn't rule it out. People, the market doing that with the ECB either, based on some of this data. But we'll wait and see what the rest of the numbers come out as. We also got the in business expectations or business climate numbers coming out as well. The usual data coming this month with the final consumer confidence number, which still stays in a negative. It's been negative forever. So business climate coming in worse, down 0.62. We saw services rising a bit though. So we're again seeing this bit of disparity between services and manufacturing industrials. That came in lower but higher than expectations. A bit more interestingly, the consumer inflation expectations largely unchanged, but due to an upward revision last month. So the ECB would like to see that coming down a good chunk, although selling price expectations came down a few pips to 6.1. So this is all to do with inflation expectations, which is a big part of the ECB's makeup. Didn't get much data out of the US yesterday. One thing I'm just keeping half an eye on is the mortgage level in the NBA numbers. The applications have been up and down, so nothing really of note from there. But the mortgage rate continues just to creep lower, not following perhaps as fast as what we're seeing with rate expectations. So there is the potential for mortgage holders just to get squeezed a little bit if rates start coming down. You'd expect this to come down a bit quicker given what we saw, as I say, in the Fed rate expectations. They were very quick to go up in previous years, but they're not as quick to come down. We've had Fed's Bostic out saying, speaking about inflation, there is still some distance to go. The labour market is still quite strong by historical standards. We can't wait until inflation is at 2% to move away from a restrictive stance. He says he's seen inflation coming down faster than expected, and unemployment has risen faster or farther than he thought. This means we should pull forward rate cuts to the third quarter. Would not be good to cut rates only to have to raise them again. So I think we've got a definitive voter for, I don't know if he's a voter or not, can't remember, but he's definitely, when he's going to be deliberating, he's going to be pushing for a cut, it seems. Banxico, they've chopped their growth forecast, taken quite a hatchet to them. 2024 GDP growth They expect now 1.5% versus 2.4% in their last quarterly report. 2025 GDP expected now at 1.2 versus 1.5%. Before we talk about Mexico, those forecasts in their entirety, what you also have to look at when you start getting these 2024 forecasts at this time of year is obviously we're running out of time. So those forecasts don't maybe not have that much of significance, probably from Q4, because we're in the final months of the year. So trying to guess what's happening in 5 minutes time is a bit easier than trying to guess it 8 months ago. So these 2024 GDP forecasts will lose their importance the closer we get to the end of the year. But for now, Kay, a bit of a slash of growth there. What happened with the MEX? Any reaction?
Well, yeah, obviously it's not helping the Mexican peso globally, but I think the more important still for investors now is obviously you want growth, but the reason why they are really turning their back right now to Mexico is that ruling that the judges should be elected by public vote and stuff, and the investors are really afraid of cartels trying to take over the system again, and I think that's rather the worry right now for investors. We've regularly posted some stuff in our newsrooms about it. That's keeping the investors on their toes. Obviously, the downward revisions of growth are not going to help either. But yeah, let's see. September should be a pretty hot month for the Mexican peso. First of all, because we might see, before even Scheinbaum takes office, we might see a vote coming up as early as next week, by the way, on that ruling that AMLO is trying to push through. And then obviously we are slowly getting into the US elections, and then we will have Banxico at the end of the month, and then the Scheinbaum officially taking office. So September should be a pretty hot month for all things Mexican peso.
Yeah, I don't know what the expectations are, but do you think that forecast change pushes them towards a cut?
Well, the thing is, they also look at the US, Ryan, and since the US cut is pretty much done, they may be tempted to go for a cut as well at the end of the month. Yeah.
Yeah. So that, I mean, in one aspect, if they do cut, that would make it largely neutral-ish on the FX.
If everybody else cuts, yeah.
Yeah. But unless
depending on how much they cut, because some of the South American, of course, they are much closer to the US than any other South Latin American country. They are rather looking up than down, but you can't completely take that LATAM part away from Mexico, and we know that other LATAM central banks have already started to cut. So we may perhaps see the potential of 50 BPs cut over there.
Yeah.
Who knows,
Yeah, and obviously they're much higher rates than everywhere else, so they have got that room to go a bit bigger on a cut.
Yeah.
September is definitely a big month. There's 10 major central banks announcing in September. So it's going to be a big old month when it kicks off next week. Anyway, over to the UK. PM Starmer's been on a little bit of a German booze up. He's off to Germany, meeting Scholz, talking about some UK-German treaty, which he's called a once-in-a-generation opportunity, although details are fairly light on exactly what's in this treaty that he's proposing for next year. But he said he wants a reset with the EU and a closer relationship, which is really pissing off Brexiteers over here. The ongoing fight between when we voted to leave or when we left, and maybe getting back in. German Chancellor Scholz says Germany and the UK want to put relations on a new footing. Anyway, we'll see what comes out from this treaty. Over in Libya, for those who are following oil markets, Libyan oil output is expected to drop further now to 450,000 barrels per day, although oil is pretty much ignoring Libyan news at the moment. We're pretty much in the middle of this recent up and down move, but we're still seeing we've still got this risk overhang. And that could see oil popping again, and then as soon as that dissipates, it comes back down. So this is still a market where you've got to look at both sides: geopolitical risk for quick moves up, and then keeping the fundamentals in the back of your mind that are very weak. Demand still very weak, and that's going to always overpower the geopolitical risk to a certain extent. Going to have to talk about it, Kay. Nvidia, that stock. Well, I don't know. They should cancel every stock market and just trade Nvidia from now on. It beat on all fronts. Revenue doubled, beat expectations. Earnings beat expectations. Profits beat expectations, and their Q3 expectations, their forward guidance came in higher than expectations. But it's never enough, is it, Kate? It's never enough. What was it, down 7%, were they, or something?
Yeah, after the announcement went down 7%, they already got a 75% profit ratio. I mean, this is something where you talk to all the rats in the market, and I think some people may just not understand what happened there. It's just because it didn't beat the wildest expectations. Obviously Nvidia has been gaining so much that you can always say like buy the room, sell the fact, and things like that. But we have to acknowledge that thing is and unless the AI market and the chips market crashes away, I think that dip that we saw there, what is it, also early August was the panic move that we saw. So I would say, if a company produces stuff like that, I'm not going to compare it to any other like the Teslas or so, but it does look like this company is here to stay and doing. And they are just, I mean, we are reading all kind of stuff, but I'm just reading that they produce chips for 75% of all the biggest computers and stuff in the world. I mean, how can you not like it, right? So yeah, I think a bit of a short-term profit reaction, and but I'd say if there's a stock to buy, get that stuff down 10% or so, and I think you will find a lot of buyers there again.
Yeah, I might stick a bid in at $50.
At 50. Yeah, I think you have more chance to get Bitcoin at 50 than Nvidia at 50 at this stage.
Yeah, very much so, very much so. Right, that's it I've got on the news front, unless you've got anything else, Kay.
No, not really. Just like one add-on, and I don't know if you even mentioned it or you did mention it, probably, that the Japanese government upgraded its monthly economic assessment for the first time in 15 months. We just perhaps mentioned the end of month in there. We had a bit of contradictory models coming out, and as I mentioned before as well, August is traditionally not your biggest month for month end or whatever flows, and we've seen yesterday U.S. corporates were only modestly involved around the fixing time. Actually, they seem to have gone a little early and a little late, because it moved a little after the 4 p.m. as well. But volatility being what it is, what it has been in August, we can still expect a little bit. But I've got to say that if you look at the market moves, and we had some moves yesterday as well in the equity markets and in some of the bond markets as well, I don't think we are going to have like very big how should I say, signals. The signals don't seem to be very big on on a historical basis. So I mean, we have to be a little bit careful going into the month end. And last thing, and I want to come back on that just for 1 minute, if I may, because Starmer is also going to visit France, right? And he's already said that he wants to reset with Europe. Ryan, just give me your gut feeling. Are we heading into next year another referendum saying that we want to go back into the Eurozone?
No, I don't think so. I think he said some comments to that effect last night as well, or yesterday as well. That this is not him trying to reverse Brexit. He's trying to get new relationship going, shall we say? I mean, some of the stuff he was talking about in this treaty is like the movement of youth, students and that sort of thing. But you never know what it might turn into. He said he wants to try and renegotiate parts. The sticking point, the big sticking point still going on is obviously in Ireland, between North and South. So yeah, I don't think.
In the meantime, it has to be said that some of the big checks on movement of goods have been watered down already a bit, yeah. But I don't think Europe will want to renegotiate bits and pieces like we have seen over fishery or so, without UK coming over the bridge to renegotiate everything. It was just a thought that I had this morning, because politicians, they can say something 100 times and the next day all of a sudden they change tack. But I was just thinking that, like, if he would like kind of manage to renegotiate stuff, that may be an additional tailwind for sterling in some shape or form.
No, I agree with that. And anything like that will be a positive. Anything that's positive for us will be positive for the quid. But no, I think, well, as you say, they can say one thing one day and change their mind the next. I don't think a referendum is on the cards for going back here or anything like that. But I do think he's going to look at trying to get some better relationships. It all depends on how much he's going to give up or how much Europe's going to charge him for the pleasure. But we'll see. But then, if Europe was a booming economy, they might be less willing to do something. But seeing as they're in more of a mess than we are, there may be, particularly Germany, and they've lost a lot of business from the UK because of Brexit and whatever, particularly in the autos industry. So anything that, if it improves their lot, they might be more willing to concede a few bits and bobs. But we'll see. It will be something to watch next year, I think. Right. Well, Ali, he's getting busy. Let's see what you're up to, Ali. Talk about gold first. Can we see $1,500 move in gold on month end? I don't think so. There will be some big moves. We have seen some month end stuff going through commodities, particularly oil. Seems to have. We've seen times when it seems to have a fixed move. So I won't rule out seeing some messing around in commodities. $1,500. I think you need some big headlines to drive that rather than just month end. But gold is pretty much flapping around in a pretty tight range again at the moment. Like you say, 2520s, 2500, give or take, is the range. So it's going to need something to break that out. And you also talked about short cable. How long can the market go short dollars? How long's a piece of string, mate? As we've seen, it's been short dollars for quite a few weeks now. I personally think we've been at a stretch point, which is, well, some yes, some no. If you look at some pairs like Aussie finally cracking through 68s, that doesn't suggest we've seen the end of dollar weakness in this pair. Same for the Kiwi. That's a little bit of a pullback after breaking up towards that 63 highs there. But then, as you say, cable's pulled back a little bit, though it's not getting too far. We're still holding about above this old level here on 3170s, which goes back all the way to 2021, 2022, and a bit further as well. So we're holding that, which is still positive for cable. So keep an eye on that if you're short. And you think the dollar might strengthen as we go into NFP. Well, we know how much of a lottery that is. If it comes in a weak one, you're going to see the dollar get smashed again, particularly you get a negative number. So, as always, mate, be careful. If you're having a I think moment into NFP, you know, you're just picking a side, you're tossing a coin. Is that really trading and what you want to get into, mate? Trade what you see, not what you think. Right, well, let's have a look what is going on. Euro dollar. So we've had this break of 110, and this has been the sort of area I was talking about yesterday. We're either going to ping pong 110, or sorry, 111, 112, or we may get a move either side. This 70 area, just these little lows here, after we had this move up, is a bit of a line in the sand. We've held it, so it's keeping this alive. But already, as you can see, we're running into trouble back up at 111. So here's your markers for today: 111, 110, 70, 75. If we move back above 111, then it keeps this move alive, keeps this whole trend move alive. If we start cracking below there, though, then we might be washing out a bit more of this move, that particularly this leg that we've seen in August. So bit of balance now. Probably going to have to wait for the Yanks to come in, see what they want to do with it. And also, as mentioned, we've got the end of month stuff going on as well. Euro sterling. Oh, let's go into that one. This one, we're tapping the figure. Okay, this is the zone right down here. We've seen the action here before. It's looking a bit sticky already. We've had a move close to the big figure. It's held for now, but obviously the bounce isn't looking strong at all. So probably just going to have to wait and see what happens down here. We're going to test these lows, break these lows, or are we going to bounce from here, maybe consolidate between 84s, high 84s and into 85. I've had the slicer on as usual here, as I have in euro dollar as well. Kiwi has just mentioned we've had this break now above here. Let's give it that little line. That's just something in the room. So we're holding it. We're trying against this level here, and this level goes back a bit. Let's see if I can catch the right time frame. So this level round 62.80 was just these highs, and we've had a bit of action as we went up here, and then after we had this move back down from near 64s, it just became a bit of resistance, quite significant resistance actually. So I'm just that's why I've got it on my chart, just keeping an eye on that one as to whether we're going to build support on it. It's looking a bit wishy-washy at the moment, but if we do manage to build support around here, then we're going to have a definite crack at 63s on that one. If we get back below, then maybe be looking at a move down to this traffic zone here and back towards the 62 handle for that one. Kate, not a lot else. I've got my dollar CAD on. I'll have a quick look at that and I'll bang it over to you, mate. Dollar CAD, I'm still short this one. This is still messing around the bottom of this zone down here, but it seems to have just gone a bit quiet of late. Again, still not really following oil in a particular way, but it's still looking particularly weak. Still need to get above 135, or else we get below 134.30s. So take your direction from that one.
Cat's still looking pretty okay, despite a bit of a comeback that we may have seen in other dollars. It's the cat is doing all right. Together with it's the commodity currencies, right? That are doing particularly well into this end of the month. Even if oil has been coming back a little bit, we see things like the Norwegian krone doing pretty good as well. It's a bit of a sector trade, right? That is doing well.
Yeah, seems to be. Say the bounces are very weak, so it keeps this trend very much alive anyway. So wouldn't be surprised if we see it lower before we see it higher, but I'll let the levels do the talking, as mentioned to Ali. I won't think. I'll see what the price wants to do. Right, over to you, mate. I'm sure you've got a couple you want to show us.
Yeah, just a few. And one that I've been keeping a close eye on as well is this Aussie dollar, right? 68 figure a quarter. We are now working on that zone. It has been an area in the past as well. We had that overshoot then in well, overshoot. We had that shoot into the year end, and we are slowly but surely creeping back up there. It does look to me like it has to do with month end, probably what we're seeing this week, because when you look at things like, for instance, and I'll show the euros in a bit. I told you be careful on this euro commodity currency euro antipodians. We are really going very weak there, and I wouldn't be surprised if we close the month on a weaker one. All right. It is not showing too many signs of bouncing back. It didn't even give me a re-entry possibility that I was waiting for. And now with those European CPIs, they are adding to the fund that we see in all those euro commodity crosses. Euro Canada as well, by the way, has seen a quite steep drop as well over the past few sessions. Yeah, I was talking about this 162.5 on the euros. We're already there. Didn't last very long, and same thing as on the Kiwi. I do think that we may see just a continuation into month end, really. Get down to 161.5 wouldn't surprise me now, because it is really looking a bit weak. Just be careful. This is a daily one, right? So you can have a few intraday hiccups, as we've seen over the past sessions as well. There is a bit of up and down activity too, but this really still looks pretty weak to close the month. Okay, so be careful there. Ryan already showed euro dollar, euro sterling. Yeah, we are in the zone, although a bit, and I would say that's surprising. There is a bit of take profit going on here in the euro sterling. May also be perhaps a few fixings going through. But we noted also in the room that sterling actually followed that euro move pretty blindly. So there is likely some natural take profit going on as well into this zone, because it had been traded for so long, and we're seeing take profits here now. I'd say if we get some more bounces, keep an eye on what's happening at 84. 30, 35. That's a bit of a zone that I'm going to look at for any topside moves into month end. And then Derege is always looking at gold, of course, and Ali was talking about that as well. Now, if you look at moves in gold, look at month ends. We do, and I don't want to tell Ryan that there is no things, but I've noted for months now on end, and look at here even in June as well. We do see month end flows in metals as well. So be a bit careful for tomorrow. We may see that last move up, and I've said it as well. If that's the direction of the dollar that we have into month end, why not, hit that 25.5 and then reflect again. I think if I see that move, I'm still a bit long. If I see that move into 25.5, I'm going to be a happy camper, because I do not know right now what's going to happen with the dollar come that next NFP. Okay, silver a bit similar. I've only got my long-term stuff on. No ads, so I don't know. I'm going to monitor around $30. If I see it again into month end, do I need to take some of my long-term stuff up to try and pick it up lower again? But to be decided. I'm not really in a hurry on anything. Although has to be said that if we are long this physical stuff or those metals, we do pay a bit of funding every day. So I may be tempted to let some go and try to pick them back up lower. Really, there's not a lot that I want to show more. Just just to illustrate what I was saying, Norwegian kroner has been strengthening since the start of the week. Okay, so it didn't really trade too much of Brent or general oil, but it does look like month end is as well already at play there, and we could see a bit of stronger Norwegian kroner towards the back end of the month. Swiss is the other one that is still very much strong here. We are on a bit of support here in the Euro Swiss, but then you know what's going to hold it up if Swiss is already bid and now we are getting those weak CPIs. We may go and have a look at those low 93s on the Euro Swiss before the end of the month as well. That's how I'm looking at it. Ryan, back over to you, mate.
Thank you very much, mate. Just have a quick look at Bitcoin. How about that? Seeing as Nuno wants to have a quick butchers at that. I don't know what you're up to, Nuno, so let us know. This is. I'm never too keen on the techs on this one because it's volatile as a bag of spiders. So you can't really trust the levels that much, the techs that much. What do we got? We got a bit of a downtrend, obviously, a bit shallow. You might say this is maybe setting up a flag, whatever, but then, you know, you just get these big spikes and whatever now and again. Levels pretty much in line with what Gav said, and he looks at this more than we do. 58s, 59s against here. We're knocking around at the moment. Bits and pieces around about 52s down to 51, 50s. Obviously going to be a level as well. This spike bottom here around the 49s came in about a prior area there. So depending on what you want to do, as I said, we are in a bit of a downtrend at the moment. You know what it's got to do to break that, get above these line here and then break some of these prior highs and ultimately the all-time high. Yeah, just a few times the report. As I say, you get this move and it's following a bit of a trend line, but you know, then you get a half decent level and it just carves through it till you get to a bigger level. So I think you've got to be a bit choosy with your levels, mate, on this one. Look for the ones that really have shown up, you know, with a decent bit of price history, decent bit of action around them, and rely on those rather than some of these more flaky levels in between. I'm still bid a buck above wherever K's bid, down at $30 or wherever, $31. So that's all you need to know from that. Right, on that note, we shall call it a day for today. Have a good one. I'll be off again tomorrow. I might be in for the flow show, mate. I'm not sure. I'll let you know later on this afternoon as to what's going on.
Yeah, okay. Well, as long as you don't let me know at 5 minutes prior to the show.
3 minutes prior to the show, I'll let you know. No, so I'm going to be the last of my holidays before the kids go back to school, and the summer is over and we get stuck into the latter part of the year. Thank you very much, Kay, as always. Thank you, boys and girls. Come to the show. We'll see you all tomorrow.
Cheers.